Joy Ota, also known as Leo FX, and in this video I'll be talking a bit about what to do after installing the XNES app, because you will be installing the XNES app, and after having an account, open an account, signing up, the next thing you do is to connect this XNES account to your MT5 app, your MT5. That's what you're going to do. Now I'll be connecting. When you open an XNES account, I never said this, you will be given two accounts. One is the real account, the second is demo account. The demo is for practice. You practice in demo account till you have this confidence in your strategy, you have confidence in your risk to reward, you have a good winning rate, so you already know, okay, if I place 10 trades, I'm gonna win 6, I'm gonna lose 4. All right, so you already know how your trades are after journaling. Now this demo account is what I'll be showing you how you can actually get the information and log in on your MT5. All right, now after signing up and logging in, this is what it will look like when you sign up in your XNES broker and you sign in your login. This is what it would look like. This is what it will basically look like. Then you click on this, you click on this box here, this one, click on it. Is either you click on that box or you click on the three horizontal line. But when you click on the three horizontal line, this one I just said here, this one, no, sorry, this is either you click on this or you click on this. So when you click on this horizontal line, the three horizontal lines, click on this gear button. You'll be given $10,000 as a demo. It isn't a real money. Basically, you can't withdraw it, you can only trade with it. And if you feel like this money is too big, like for your mindset it's too big, you can change the balance. You can change it to, let's use $1,000, because it might be easy for us to trade a small amount of money. You can actually, you see, it's been we've edited it. So we change it. Then you click on this bar here, this gear here, this one here. You click on it, then click on account information. Now these are your details. Let's take note of all these things here. We'll be needing this. I will need to know this. MT5 trial 9. Alright, so we'll head on straight to our MT5. Let's copy this login. MT5 trial 9. Click when you are here, you click on this plus sign. Right here. Click on it and search for XNES. The first one. The first. XNES, this one. You see? And remember, this was what we saw on our account. Trial MT5, XNES MT5 trial 9. Take note of it, because there are lots of trials that you can see. So you take note of that which is attached to your account. So we click on it, we paste the login, then we log in. it could be slow sometimes. So would wait. Good, we've been given the account. All right. Now this is what it looks like. It's so simple. You do this. You put in your login and your password. The password is the password you used in signing up on Nextness. That's the password. Then you search for it. It's as simple as this. Now you can actually, this is a chart. This is where you place a trade, new order. If you are buying, you don't want to enter at current market price. You want to set a limit, and when it hits that point you can buy. If it hits that point you can sell. Okay, this is what it looks like basically. All right, so I just did this so you can actually have a full glimpse of what your after the after experience after signing up on Xness. So this is what you can do. This is what you should do. All right, so I would head on straight up to my trading view to explain in simple terms how technical analysis works. All right, so let's go. All right, we are right on my trading view right now, and the first thing you want to learn is to identify an uptrend or a downtrend. That's the first thing you want to identify. All right, that's the first thing you want to identify. Now, when you see it going this way, then up and down, then up, then down, and up. When you see something like this, yeah, this is an uptrend. When you see something like this, is an uptrend. It's moving up, up. This is an uptrend. When you see when you see a structure like this on your chart, it represents an uptrend. Then when you see something like this on your chart, I'm gonna draw something real quick. Something like this. This is a downtrend. Keeps going down. Keeps going down. Now let me explain something to you. Yeah? This 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 uh this stuff this line you see going downwards is called the corrective. The impulsive move. This is a downtrend. It's going down. It's a downtrend. It's an impulsive move. Then this you see here, let me clone this. Then this one right here, sorry, this one, this one right here is the corrective move. The impulsive move is always longer than this corrective move. Yeah, so this is a downtrend and this one here is an uptrend. It's moving up. Now let's see it on the main chart right now. This is Canadian dollars and Japanese yens on a 1 hour time frame. So let's see what it looks like. Now this is a downtrend. This is a downtrend. This is a downtrend. It started here. Sorry. I need to delete this. Sorry. So this is how you draw your trend line indicating a downtrend. This is the impulsive move. Then this is the corrective move. This is the impulsive move. Sorry. Corrective. Impulsive. So something you need to know about the market is that you don't have a straight trend. Like, it doesn't go down straight. There's always a back and forth. There's always a retracement. It goes forth, it goes back. That's the moves. Those are the moves, basically. So it goes. I'll just stop here. These two will come down here like this. So this is a downtrend. This is supposed to come down here again. After moving up, it's coming down. After moving up, it should come down. So this is a downtrend. Then now let's search for an uptrend. Let's search for an uptrend. All right, this is an uptrend. Sorry. Goes up. This is an impulsive move. Then it makes a corrective move. Then another impulsive move. Then a corrective move. Then an impulsive move. This is an uptrend. This is basically what an uptrend looks like. This is what an uptrend looks like. This will determine whether to buy or to sell. When it's moving on an uptrend like this, you would buy. It's telling you this is a buying movement. It's going long. So there are buyers are pushing it upward, but this with you here, the downtrend indicates sellers are having it the most here. All right, so I'll be telling you about supply and demand right now. So you see this part here. Let me do something quick. I'll make it very simple for you. You see this area here, is called the supply zone. This is supply zone. Anything, if it works out fine here, there's going to be supply means you are selling, demand means you are buying, basically. So when you come down here, before you experience an uptrend, there would be a move. This is demand zone. This area here is a demand zone. It indicates that there would be a buying movement, an uptrend. Then around this supply zone here, that looks like a cap. All right, when you see something going like a cap, when you see it going like a cap, like this, all right, a cap, and it goes up, then it comes down, and start going up, start coming down. Okay, you see, it made something like a cap. So you see, like a cap. This zone is the supply zone. Then below here is the demand zone. So in this demand zone, you'll be looking for an opportunity to buy, while in the supply zone, you'll be looking for an opportunity to sell. All right, in this supply zone right here, you'll be looking for an opportunity to sell. All right. Now we have two blocks: bearish order blocks and bullish order block. Now when you hear bearish in the forex market, it means it's moving on a downtrend. It means you would sell. You are selling. Bearish, downtrend, selling. Now when you hear bullish, it's going on an uptrend and you are buying. Bull buys, the bears sell. Now to create a bearish order block that I told you that it's actually a sign. Apart from the supply and demand zone, the supply I told you is a zone where you look for a selling opportunity, while the demand zone is for a buying opportunity, right? Apart from that, we have the bearish and the bullish order block. The bearish order block shows that it maps out a zone where you'd be expecting these candles, these red candles, green candles, you are expected to move, hit the blocks, then sell on a bearish candle. Now I already, in this video, this Canadian dollars pairing with Japanese yens, I've marked out a zone already. I marked out the zone below here. This is a bullish order block. This here, let me use an arrow in indicating, right? All right. So this here, sorry, is a bullish order block. This is a bullish order block I drew here. Bullish order block. I drew a bullish order block here. So this is a bullish order block. A bullish order block shows that whenever price moves and taps at this region, is meant to buy, is meant to move on an uptrend. So you see, if it came down, it tapped here. Now I'm expecting it to move. It's moving up now. It's buying. I'm expecting it to come back. Understand? All right. Come back. Hit this zone. Hit this bullish order block again and move up. Hit here and move up. Right? All right. So I'm expecting it to hit my bullish. Remember these words: bullish order block, bullish order block, bullish order block. It will move here, hit this bullish order block, then buy to my target here. All right. So this is a bullish order block, but this here is a bearish order block. This right here is a bearish order block. This is it. This is a bearish order block. Let me indicate so you would see. Yeah, this is a bearish order block. Now you see, something you should take note of. You shouldn't wait till this comes here, like it hits this before you start making another block. Once you see this already, you create another block for it. All right, in what scenario should you create another block? In what scenario should you create either a bearish or a bullish order block? You create a bullish, or in this case now, you create a bearish order block once you notice that alright, this is an impulsive move, right? The corrective move is where you actually, and it shouldn't just be a corrective move, all right? This corrective move here should be where you would draw your bearish order block if and only if what follows it next breaks this thing, breaks it. Now let me show you something very quick. Now you see these red candles here, these multiple red candles. You see, let me clone this thing. I don't want it for this video to be too long. It broke this place, right? It broke it. 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 It broke it, right? It did break it. You see it? It went down, up. Then instead of just going this way, it broke it down like this. So when it simply makes this um impulsive move and a corrective move, now the impulsive move after the corrective move, it should break this one here, this one I'm pointing, this candle here. It should break it. This red candle here, it should break this place. When it breaks it like this, now you see it broke it. When it breaks it this way, then that corrective move you made up, you would search for a red candle there and draw your order block. Remember what I said? This is an impulsive move. It made a corrective move. Now the next impulsive move is to break the first impulsive move. First of all, impulsive down, corrective up, impulsive, corrective, impulsive. Now when it makes an impulsive move and a corrective move, for you to mark out a bearish order block, the next impulsive move should break this here. This I'm pointing this arrow to. It should break it. It should break this. So you see, it broke it. Let's zoom in a little bit. Let's zoom in. See, it broke it here. This candle here, this green candle, it broke it. Then it went down. That was why we made this block here. Now let's come down a bit. Then it went again after making this impulsive move, corrective move here, and it broke the structure. It went up correctively again and it broke this one here. See it? Let me zoom in. You see this? It broke it. It broke that candle there. It broke it and it went downwards again. So it is at this top here of the corrective move that you would draw your order block for the bearish order block. Then you wait. You would wait. You will leave the market. It will keep moving and moving and moving and moving. When it goes down and down and down and down, it will come back. Remember I told you, the downtrend doesn't just move on. It's not a linear motion. it isn't a linear motion. It moves back and forth, back and forth. So you wait for it. It will come back. You see, it's moving. It's moving. Let's slide. Let's slide. So you see, it's still moving. It's still moving. We would wait. Some days from today. Today is 21st of March 2023. When I come back to this place, you would see this thing. It will surely hit this other block here and sail downwards again. Forget the fact that it's kind of avoiding this other block here. It will keep going down, but finally it will come back, hit this other block, and sail to the bearish direction. It will sail downwards. So this is a bearish order block. This is a bearish order block. Now let's see, and I showed you downwards. This is my bullish order block right here. So you see, I've marked out this zone. When this price moves, I'm waiting for this price now. It's moving. I'm waiting for it to hit this zone again, come back down, hit it, then buys. So I've already marked out this zone and I've placed a pending order on my MT5. So this is basically what a uptrend, a downtrend. The green candle, yes, shows is buying, the red candle shows is selling, and I've explained what a bearish and a bullish candle is. Now you might be wondering, what's the essence of this big green box I made here and this reddish block box here? Now I would explain. Yeah, I'll explain. Now when you look at this here, right? This here, let me use an arrow in my explanation. You see this red here, it signifies a stop loss. You see, the market is full of probabilities. I didn't make the market and I cannot predict what will happen. I only react to the market. That's what every trader is meant to do, react to the market. Now, I know I'm not 100% sure if this would play out. I'm just working based on previous playing out of this market. Price actions is doing this, is doing that. Remember, you need a structure. You need to check for liquidity, then you enter. You understand? I'll be telling you what liquidity means in the subsequent videos I'll be posting here. Just simple, easy stuff. Right now, I don't know. Based on probability, I don't know if it's going to move in my direction or it's going to move against me. But according to what I've been doing for some time, I know if this thing plays out where this is what it should do 60% of the time or 50%. This is what it should do. But if it doesn't move in my direction and it decides to go haywire and do whatever he wants, I don't want to lose much. Now, this red here signifies stop loss. Stop loss, it simply means the amount of movement. Remember in my previous video, what you must know before trading forex. I told you what pips are. Pips are price movements. Now, if it moves against me, let me zoom so you see what I'm saying. You see this, take a look at this. Zoom. Oh, sorry. I'm using my phone right now. That's why, I guess. You see this thin line? This thin line here. This thin line here. Between the green, the big, this super big rectangle green block and this red little rectangle block. That is where I want my trade to begin. So if this candle, this green candle moves and moves and it comes down, it hits this place here, then my trade will start running. Right now my trade isn't running, but when it hits this black line here, it should start running. When it goes haywire and hits and goes down here, it goes down here to this place, I know my analysis is wrong. If it goes down and hit this here, the end of this red block, then I know this thing isn't for me. I've instructed according to the figures I imputed on my MT5. From this place, I want my trade to stop running. Even I would lose little amount of money, yeah, but it won't blow up my account. Yes, it won't blow up my account. Now in this trade, let me show you something very quick. In this trade, check out something here. You see this place where you see ratio, yeah, this 15.7, yeah, this 216.8. Now this place you see ratio is I'm risking 1 to make times 13. Now if I'm risking $1, if it goes against me, it goes outside this red block here, I'm losing $1. If it goes in my favor and comes here, I'm making $13. So you see, even if I lose 5 trades, losing $5, and I end up getting just 1, I've recovered my $5 and made extra $8. You see, so this is my target. I'm targeting 216.8 pips. The price movement. Remember I talked about price movement. And I'm risking 15.7 pips. If it doesn't go my way, I'm losing 15.7 pips. If it goes my way, I'm making 216.8 pips. Do you understand? Alright. So this is basically it. And this is it in percentage. I'm making 2% of my account. And if it goes against me, I'm losing 0.157 of my account. Alright. So this is what stop loss and target means in when I'm buying. All right, when I'm buying, this is what it looks like. Now when I'm selling, all right, when I'm selling, this is a bullish order block below here. Remember, that's why I'm buying upwards. Now this bearish order block here, I will do the same thing here, slide it to, yeah, all right. So now this is the tool you use. Remember I told you, when you are buying, you are going long. When you are selling, you are going short. Now I want to sell, I'm going short. I'm picking the short position here. Then I'm coming right here to this bearish order block. Like this. Draw downwards. What's wrong? Sorry. It's meant to move up here. I don't know why. I don't know the essence of this misbehavior. Sorry. Short position, short. Nope. Short position. Is misbehaving. I'm coming. Alright, so I had to fix it up before showing up here. Alright, so this is what it looks like. So you take it to the side, take it to the side. It's opposite. When you looking for a buy using a bullish order block, it looks this way. You are buying up. But when you are trading a bearish order block, you are selling downwards, so the green would go down. If it's going down, you are selling is going is going for your favor, but when it's going up, it's touching the red, it's going against you. So let's put it this way. Let's bring it down. When it goes above the other block, we want it to stop us out. Please, we want it to stop us out. Now in this trade, check it. We are risking 24 pips to make 152, and if we risk, our risk ratio to reward is 1 ratio 6.34. Now if I'm risking $1, I should make times 6 of that dollar. All right, so if I'm risking $1 in this trade, I should make times 6 of that dollar. Now I could as much as increase my target in a trade. All right, you shouldn't target less than 1.3. So at least this is what you shouldn't target less than 1.3, because just to cover up for your losses anytime things go against you. All right, so target at least 1 to 3 risk to reward. All right, so this is basically the bullish order block, how to install your stop loss, your sell limit, or your buy limit. All right, so this video has been a long one actually, right? Okay, wait, something, sorry, I forgot something. I didn't teach you how to set your buy limit or your sell limit. So we'll be using this one with you whilst you were here. I won't use this bullish here, I'll use this one. All right, so I want to sell, and this is Canadian dollar to Japanese yens. I'm looking for a sell opportunity. So I'll head on to my demo account on Xness and I will impute it. So you hold this for some time, you hold it a bit, and this will appear. Click on settings. Then before we do this, remember I didn't talk about pips calculator. Pip calculator. If I want to risk $1, I will need to know what lot size I'm entering. Alright, so I'm risking $1 to make 3. So I would head on to my pips calculator. Not to make this video so long, I'll head on to my pips calculator, type in 30 pips, type in 30 pips to know my stop loss, so I will know my lot size. So I'll pause this video. When I get there, we'll continue, right? Alright, so I write here FXTM pip calculator. Now remember the currency we want to trade is CAD JPY. This is it. And pip amount we are risking is 30 pips. 30 pips. So you put 30 here. Now remember we want to risk $1. So you edit the least pip for currency pairs is 0.01, and this is the least. So we can't risk $1 on this trade. If you are targeting 30 pips as stop loss, we can only risk $1 if our stop loss pips is 10. But in that trade, our stop loss, the pips for our stop loss is 30. So we just have to risk minimum $3 to make $9. Remember, it's 150. I've forgotten the exact, but notice the lot size we'll be using 0.01. Alright, so you click on settings to know the exact entry point. Now we know we are risking $3 to make times 3 of it. So now the entry price, we'll simply copy this as entry price. Then let's see if I can just memorize the profit level. 97716. 97716. That's the profit level. 97716. Right? Nope. These are trial accounts. Now we search for it. Here you look for CADJPY. Remember we are selling. New order. Then click on market execution. Click on sell limit. We are using the smallest lot size 0.01, and this is the entry price. This is our take profit 97.716. I got it right. Now we're coming back here to check our stop level where we want to hit our stop loss, right? So we'll wait a bit. Let me kind of pause this. So this is our stop level price here. We'll copy it. Copy. Now we head back to our MT5. Oof. It's gone. It's gone. Let me see if I still remember. Setting one. The price. What was the price? My God, what was the price? Ah. Oh. Just so let me just go back to my MT5 and impute everything right there. Plus one. The entry price is 98.806. Take profit 97.71. Sorry. Stop loss 99.10. 99.106. So this is it. In this trade, we are risking $3 to make nothing less than $9. Done. So would wait. So when you set this, just if you don't if it moves, let's check the chart here. If it moves to your direction, now see, you're waiting for it to come up to this direction, come up here, and it hits this place here, then you want it to come down back and sell. You want to keep selling and selling and selling and selling till okay, we want it to hit here. Sorry. We want to hit from here to hit here. We hit here from here, right? When it hits this place, then it sells to this place. We take profit here. All right. So it's when it hits this from here, we want it to go up here. Now it's moving up. We want it to hit here. When it hits here, then it comes down and takes our take profit, and we are good to go, right? So this is how you place your trade. Now in the next video, I'll be talking extensively on risk management. All right, I've spent a lot of time on this video. Wow, it's been a long ride. I never expected this video to be this long. All right, so I'm Joy Auta, also known as Leo FX. If you like this video, please drop your comments as to what you don't understand and what you want me to actually elaborate more on. And if you have any suggestions as to how I can actually enhance the way I teach on my YouTube channel, I'm so open to your corrective criticism. Right, I'm open to your corrective criticism. Then alright, after liking, commenting, subscribe and hit the notification bell so that you'll be the first to receive this kind of educative and enlightening piece of information. All right, those who hit the notification bell after subscribing, they got this notification first before you who didn't subscribe and notify and click the notification bell. So they got this video first and they watched it. You see, they partaked of the blessings before you, right? All right, so like, comment below, hit the subscription button, click the notification bell, and I see you in the next video. I'll be talking about risk management. All right, so I see you remain your very own forex trader Joy Auta, aka Leo FX. Stay jiggy. God bless you. See you in the next video. Peace out.